MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock. This is where we're going to give you the update on the midday markets here in the U.S. and also just take a look at the close on Europe's session. Taking a look at the markets here in the U.S., currently the 10-year bond is up about 5 ticks at 123.09. We have the 30-year bond up about 17 ticks at 148.30. And currently you have the equity markets basically slightly in the red. You have the Dow Jones 30 at 19,898, down a buck. You have the Russell 2000 down 270 at 1380.60. You also have the NASDAQ down 4 at 4951.75. I'm quoting the futures on the NASDAQ. The S&P E-mini futures are trading down 225 at 2264.25. You have dollar weakness down 25 cents at 103.25 and 2 cents, 2.5 cents. And the crude markets are down 85 cents with crude trading at 52.45. You have basically bonds up and the remainder of the market down. That includes volatility, as a matter of fact, down 2.5 cents at 14.50 on the VIX futures. So basically with the first half of this week done, it's been fairly quiet, and it's going to get even more quiet. Most of the action, as I've noted, has been in negative territory so far in this session. You've seen that the losses right now are in pretty much so 4 of the what I call influential sectors that are outweighing the gains in those smaller groups. That there's about 5 smaller sectors that I would look at. The European session really did not give any catalyst here to the United States. They basically ended on a flat note today. We saw that in the overnight session when we talked about how the markets were opening flat in Germany, London, Spain, Italy, and France. We did see some headlines coming out of Italy from the Financial Times. Basically, Banca Monte dei Paschi di Siena, forgive my Italian, it's not really good. Basically, that bank is going to be nationalized. It's part of a newly approved 20 billion euro basically rescue fund by the Italian government. That got the euro to slide at from its highs. And basically you have the euro trading against the dollar right around 104.30. 4 out of the 5 top sectors by weight have been lagging. Most notable ones are tech. Technologies as a group, as a holistic group, is down about 0.2%. You have financials lagging with the strength in the bond prices. Financials have pulled off yet a little, down about 0.1%. Healthcare is down about 0.5%. And industrials are down about 0.1%. The financials and industrials are coming off of their worst levels so far today, but still are challenged with the bounce in the long-term prices in the bonds. What's also been weighing on the healthcare as well as the technology sector has been biotech. Been a little bit more volatile these days. There's been an underperformance in IBB, which is the ETF that tracks biotech. It's down about 0.9% or $2.45 on the $268 ETF. We're going to see if that continues to be a laggard and anchor both the technology sector and the healthcare sector. The industrial sector, it's had to contend with some decent losses in what's the most notable and recent casualty of poor guidance and earnings, which is FedEx. FedEx is down $4.79 at $193.95. Gave up basically on the fact that they had horrible earnings, and they said that there's going to be a drag because of investments that they've made over the last year and a half and will continue to make into 2017 that are going to improve and make them more competitive going forward in the future against a lot of the e-commerce pressure like coming from Amazon. This also put pressure on the transports as well. you saw that the transport average was down about 0.4%. Another cyclical group, consumer discretionaries, they're unchanged. Couldn't get a lift from the positive earnings and guidance from Nike. Really, the sector has been basically dragging, and you could probably chalk that up to the fact that Finish Line, ticker symbol FINL, did come out with earnings. They're down about $2.61. This is a $20.40 stock. Basically, not only did their earnings miss, but their guidance, their foot traffic for October and November was down considerably. That put pressure on peers, as we had mentioned this morning in What's Hot on the Open, like Dick's Sporting Goods and Foot Locker. Let's see if this starts to become a little bit more systemic in the bricks and mortar. We also saw in other earnings notes, Accenture, ticker symbol ACN, down about $5.34. This is a $118 stock. Basically, the underperformance has been contributed to, just the general technology feel, a little profit taking. They missed on estimates and lowered their full year guidance. So on that news, the stock got hit. There is some upside though, specifically in the commodity space. In the overall energy sector, we've seen that sector firm up, especially in the drilling and mining sectors for the energies. The sector as a whole is up 0.4%, and that's despite the 1% pullback in West Texas crude. Today we had the EIA report that came out and showed a greater build of over 2 million barrels. That basically pulled crude off of its best levels, got it down to 52.77 right now into the midday. But again, we're seeing that the balance of the sector is holding up in spite of the pullback in crude. Another commodity-related sector, materials, is up about 0.4%, and that's actually holding up the sector as a whole. As we had noted, treasuries, the prices are up in the treasuries. As a matter of fact, the 10-year, the yield is actually down about 2 basis points on this pop in price. This has given the financials a little bit of a laggard or an anchor there. Could be some profit taking going into the year end. The only notable economic data that was out today were the November existing home sales. It was a surprise. They came in, increased by 0.7% from October to an annualized rate of 5.61 million units. That was above the estimates that were being seen somewhere around 5.5 million. So that was an impressive and unexpected move in pre-existing home sales. That number right there also makes up 90% of the total sales in homes. So that is somewhat of a catalyst right now. We'll have to watch to see how inventories are shaping up as far as homes still on the market, see if that market starts to get a little thinner. You could see home prices come up, maybe more quickly than you're seeing the current 30-year rates going up for home purchases. All right, folks, that is it for Strategy Now. Join me at 3:30 Eastern Time for Tech Talk. That's where we're going to marry technical analysis and option pricing. I'm going to give you transparency. In other words, ranges for stocks and names that you're going to see notable action because of earnings or because sector movements or whatnot. I'm going to give you that transparency. So we'll see you at 3:30 Eastern Time, 2:30 Central Time on Tech Talk. Till then, thanks for joining us here at Strategy Now. Take care and have a great day.